Hey everyone, Anthony Venuti here with In Touch Mortgage Solutions. It's Friday, Finance Fridays, and on this episode, we're going to give 4 tips, 4 pieces of advice for home buyers, home sellers, as we move into a changing market in 2022. You don't want to miss it. Stay tuned. It's coming up next. Navigating the current mortgage and real estate marketplace can be a big challenge for many Canadians, especially as everything is changing, as we've seen over the last little while. And understanding exactly when these changes happen, how it impacts home buyers, home sellers, future homeowners, anyone looking to engage into this market right now. Obviously, it is a little bit of a change. As we've mentioned before, we see a lot of clients and a lot of home buyers maybe on the sidelines as things start to calm down. However, there are clients that are still engaged in the market, and helping those clients navigate this current marketplace is one of the duties here that we take at In Touch Mortgage Solutions. And obviously, I wanted to share some of the content and some of the conversations that we have with our clients, some tips and advice that we can give to you as a viewer and to an existing client when going out there to purchase or sell your home. So obviously, point number 1 is getting a pre-approval with a rate hold for at least 120 days, as the rate today is not going to be the same rate that you potentially will get in 120 days, or if you decide to wait a little bit longer. So starting the journey with a pre-approval will obviously give you the baseline of understanding exactly what you qualify for. Now, pre-approval is not just always based on a purchase. It can also require for a refinance. It can be for the sale of a home, even if you need a very small mortgage, even one smaller than the one that you have. Understanding the nuances within your employment, your income, or your taxes file can be a very big proponent in getting that pre-approval. As we see a lot of clients who over the last few years, obviously due to the pandemic, may have changed career paths, maybe had an additional job that they no longer work. For example, maybe they were in the service industry, they lost that opportunity. Now maybe they found another job in a different career. Maybe they were hourly, maybe they were salary, maybe they opened up their own business. Understanding your employment when it comes to that pre-approval is going to be very important, because it's going to give you a direction of how to get your mortgage approved and what requirements are going to be required of you, the future home buyer. So understanding that, making sure your income taxes are obviously filed, as most banks, chartered banks and mono banks will require potential proof that your income taxes are complete, especially if you're self-employed, depending on the lender that you're working with. Now, having that paperwork ready can give your mortgage professional the right guidance and understanding exactly what the optics look like when presenting it to a lender. Now, here at In Touch Mortgage Solutions, we pride ourselves in the fact that we understand underwriting processes. We've come from the banking background, so we can put together these deals and understand exactly how the lender is going to perceive that information and what exceptions are available. So always working with a licensed mortgage professional will add value. And understanding that when you're working with a mortgage professional, something we talked about last week, is that we have different options with different lenders. We're not just hand-tied to one specific bank. And most importantly is understanding if you're in the buy and a sell, is the lender that you're working with, maybe you're with an equity bank, maybe you're with a private, maybe you're changing directions. Is the lender that you're working with going to provide you with the bridge financing if required? And if not, what are the solutions and options that you have? First and foremost, pre-approval, go through your credit. It's going to go through your income and employment. It's going to review your down payment and all this other fantastic stuff. The only variable that we don't have is the actual property, which moves us into point number 2 is when buying a home. So obviously understanding the property, understanding where that property is located, what the potential purchase price of that property is, what condition is the home in, right? Is the home need major renovations? Does it need minor renovations? Is the home have a component for rental basement? Is the home rented? All these things you need to understand when going out there to purchase a home. So having a conversation with your real estate professional alongside your mortgage professional, making sure that they're in communication with each other is very important so that they can work out all the scenarios for you based on that home purchase. As we are moving into an environment where home prices are shifting and rates are elevated and banks are changing guidelines in the near future when it comes to credit lending, you will be most likely required to have an appraisal done physically or internally. And depending on that purchase price, that lender may require that. And it could be something that you need to understand, especially as something we talked about last week, is if the appraisal comes in lower than anticipated, how does that impact your purchase? How does your down payment change? And how do you shift gears accordingly, right? So tip number 3 is obviously if you're a seller and you're looking to go out there and purchase your home. And something that we've advised all our clients who are in this particular scenario, especially now as the market has shifted. Just a few months ago, it would have been a different conversation. As the data comes out, we shift our focus and we shift our opinions, right? So just a few months ago, we were telling clients, hey, when the market was elevated, it was a very hot market, not just ourselves, but the real estate professionals saying it's very important to purchase your home because there is limited inventory. Homes were going multiple offers. So you needed to get down and securitize your home because we were under the impression and obviously understanding that your other home would have sold in that market. But as the markets shift and depending on where you're buying or selling, obviously it's all dependent on speaking with your real estate professional about your particular market, because not each market is identical, but understanding exactly how to list that home. So we were advising our clients right away, get your home on the market, because the longer it's in front of people, basically it can catch a lot of people's eyes and you might get some offers and you actually get to feel the market out and understand exactly what you might be getting for that home, because that's going to impact the amount of money that you're going to have potentially for your purchase, especially if you're selling and you need every single dollar from that sale to close on that future home. Because remember, you need to have a firm purchase and a firm sale to do an actual bridge financing. So if you require a bridge, you need to have a firm purchase, firm sale, understanding your outs, understanding your solutions when listing, but more importantly, try to get a longer closing if you're listing that house, maybe more than 90 days, between 90 and 100 if possible. Obviously, it depends on the offer and the people that are putting in that offer and their conditions, but that's where the real estate professional comes in and understanding what options you have as a seller and what conditions you should be looking for in that offer as the market is beginning to shift and we are starting to see different conditions being inserted in different offers. So understanding that is very important. But to encompass and basically encapsulate the entire conversation, whether it's the pre-approval, talking to your real estate professional, making sure all your income docs are in, understanding that in the shifting market, there is still a possibility that your home may not close, right? So maybe someone purchased it, something happened. What are your exit strategies? And tip number 4 is speaking to a real estate lawyer in the current market right now. Because if you back away from your offer, if you are not able to close, what are the ramifications of that action? Now, especially in a market that's changing, you may have a binding purchase, you may have a binding sale. Situations can arise where maybe a situation changes. Understanding, if you're putting an offer in on a house and you like it and then you don't bring the deposit, does that mean that you're walking away? Not necessarily. It's still binding. It just has to be basically discussed with a real estate professional. What are the clauses? Can you walk away from this? What are the chances? What are your legal ramifications if you do so? So obviously listening to a real estate professional is very important, understanding it from the perspective of a mortgage professional. But the most important part is what's going to cost you the most amount of money is if you don't speak to a real estate professional about what the outcomes can possibly be. If you're selling your home, our advice is obviously try to keep it as close to the closing day as possible for the purchase and the sale. But in this market, because of what we're seeing, I would suggest closing on your sale first, even if that means, putting your stuff into storage, maybe finding a temporary solution for a week or 2 weeks, just making sure that you have that money in your pocket so that you don't get into a particular situation if you're not able to close. Obviously, these are based on current conditions, and speaking to your real estate lawyer will obviously be a very big value add. So we'll leave the video here. I hope you found these 4 tips and advice and solutions and options, valuable. If you know someone that would benefit from these tips and advice, please feel free to share the video. Don't forget to hit the like, share, and subscribe button and that notification bell so you can get notified every time we post content here on Finance Fridays. And thank you again, wishing you all the best and an even better weekend ahead. Until next week, thanks for watching. See you next week.